please take the floor. So, good morning. I'm very pleased to chair this table with professionals that are extremely skilled and capable. So thank you for the invitation made by the organizers of IBTT, especially Professor Shuiri, Mato, and my friend Flavio. And I'm honored to make the introduction of this panel. It's extremely current, and more it will be present in terms of importance and thought regarding our society. It will be dealing about the idea as tax rules can induce to behavior. And here behaviors we are dealing with are those that allow improve the environment and human health. With this in mind, to deal with the subject as was presented, Professor Alison Christians, I just will add some words so you know the dimension of the professionals we have here in this panel. Professor, as mentioned, she's the head of tax law of McGill University in Montreal. She wrote several essays and papers, articles, and she has been quite innovative because she deals with the frontier of tax law with the environment and human liaison. The subject matter of her lecture today is especially more interesting because she will deal about the idea of not sustainable profits. What does this mean? Not sustainable profits are those profits that don't take into account cost component which is external. What is this component? So we all know the companies make up their costs, but they don't add to it what society has to pay to consume. This is environmental damages, damage to human health, i.e., it's saying the following: when it's done the profit calculation, the company, part of the cost for recovery of the environment and human health, it's not being added calculate, and there's an opportunity or obligation to through the tax system such costs to be part of it. So she's one of the best known personalities in taxation and influence in this environment we are talking. Then Professor Tatiana Falcão, PhD by Vienna University, expert also in this area, an expert on international taxation and environmental taxation and United Nations program and UN. She has participated. She was appointed by the Women Committee of the International Association of Women's Committee as one of the 40 most influent personalities currently. And her subject today will be about a proposal for multilateral treaty for carbon, to tax carbon. That's very interesting. Doutora Tassiana Pselli, doctor's degree by USP, professor of several courses at the FGV, writer of many books, and she will share her view regarding some aspects in the area of tax reform. So it is the controversial aspects regarding the tax reform. Paula Rodrigues, professor, she's an accountant, expert on dealing with companies, organizations, who also will help us to pave this path between taxation, environment, and human health. Professor Hollins, we all know him, PhD in International Taxation by Queen Mary University of London, Masters by the London School of Economics, doctor by the University of Minas Gerais. He travels, he's have a fantastic resume. Now, following the same line, we have Professor José Maria Arruda de Andrade, professor and doctor's degree from USP, Department of Economic Financial Law, doctor of PhD by the FGV in the economics area, and he carried out research in the relation between economy and law, taxation, tax incentives, and tax budget. I invite you to buy his recent book, the book about selective Taxes and Sin. So, a healthy taxation, a free translation of the name of the book, recently published a pioneer book on the subject. And with this in mind, I asked my friend Flavio to present this panel on the practical side of it and enjoy your morning. Well, good morning. First, I would like to thank the organization of this Congress for the invitation and privilege of being part on the side of those I admire so much. Celso, they did a fantastic introduction. So the first to speak, a Professor Alison Christians from Canada. She will share with us a subject which is environmental taxation regarding the point of view income tax filing, which it's a counterpoint of the threat of carbon tax, indirect taxation. So, Professor Allison, please take the floor.
We're going to test this. Good? Okay, I'm going to come through. Sorry. Thank you. Okay, I'm just going to reorganize. Okay, bom dia a todas e todos. That's it. That's all my Portuguese right there. No, I can say obrigada as well. It's such a pleasure to be here. Thank you so much for putting this panel together on a topic that is, to me, fascinating. And to be in Sao Paulo for the first time. I've been to Brazil many times, but this is the first time to Sao Paulo, so it's a great honor for me to be here in this beautiful building. And it's not even hot yet, so I will warm it up for you, perhaps. Okay, so you see, this is my title, Shifting Environmental and Social Costs Through Taxation. And, but before I go into the specific research, I thought, well, maybe because this whole panel is going to be about environmental and so-called sin taxes, let's take a little look at this vocabulary that we're using. It's kind of fascinating that we still use the term sin taxes for what we're trying to do here. So let's see if I've got this guy worked out. Play, no. Play, no. All right. Oh, something happened and it was good, so we'll go with it. Okay. So you can see here, well, why do policymakers like sin taxes? Well, you hardly even have to ask the question. The question answers itself. The word is sin, and who could be against regulating sin? Of course, politicians like sin taxes, because what they're doing is saying this is something bad, negative to society, and so obviously you're all going to agree with me that we should tax that kind of thing out of existence. So it's really an easy sell politically to talk about sin taxes, because we have planted already a pejorative idea in your mind with the word sin. What's the sin? Well, you have in your mind, I'm sure, when you think about sin taxes, you think about taxes on tobacco, alcohol, in Canada on marijuana. You might see sin taxes extended even to luxury items, although then they call it a luxury tax to get at a different social idea in your mind. Still a sin, though, isn't it? Sin to be buying yachts and so on in life of luxury. So alcohol, tobacco, marijuana, these are the big ones. And what's going on when we are trying to tax these things? Why do we love it? Well, I think this political idea is the driver. But you can see here, I wrote market efficiency. Market efficiency. The price of the thing we're taxing doesn't reflect the social cost. That's really the idea of a sin tax. And indeed, it's the idea of any so-called Pigouvian tax. You all know Arthur Pigou, the economist, who put his name on this idea of externalized costs. So when you think about alcohol and tobacco, those are the two big sin taxes. When you think about them, what's the market inefficiency? Well, there's a behavioral thing we don't like. You know, alcohol abuse can cause domestic violence. It can be responsible for families breaking up. These are social ills. Tobacco obviously causes massive health care issues, massive health care costs on a system. that is not reflected in the price. And so the politician doesn't have to explain that to you if they use the word sin, right? So to us, tax experts, we understand we are talking about a market inefficiency where the product price does not reflect the cost, which means that instead of the consumer paying the cost, the public pays some of the cost of that product. But for the politician, they translate that market efficiency into words that get them reelected, and they use the word sin instead. So this is a perfect tax in the sense that people don't get that upset, or they don't feel that they can get that publicly upset if you tax cigarettes at 200-300%. Or alcohol at 200-300%. No problem. You're not going to find, you'll find some lobbies. You'll find the winemaking lobby will come and talk about the benefits of winemaking, and they'll talk about macroeconomic policy, but you won't find a strong public conversation that says, hey, let's get rid of the tax on cigarettes. What we really want is less tax on cigarettes, so people will buy more cigarettes. No one's having that conversation, and you know why, because we've been indoctrinated that it's a sin, and the sin is a public idea, a public face of an actual market economic inefficiency problem. And the tax is supposed to solve this problem. How does the tax solve this problem? By internalizing the cost. That's all that's happening with the Pigouvian tax. We're internalizing the externalized cost in the hopes that once that cost is actually borne by the consumer, they will not want to consume that anymore. Really simple idea. I mean, as tax systems go, this is great. We love a simple idea in tax. We have lots of complicated ideas in tax, but this is a simple one. So we like this. We can sell it. It's easy. I'm only on the second bullet of this slide, but I don't want you to worry. This panel has slide discipline. There are only two slides in my presentation. So you don't have to worry if it's taking a while to get through this slide. I know when I'm sitting in the audience, I'm thinking there's a lot of words on the slide, and the slide is going to take a long time. Let's get rid of the slide. Same way with sin taxes. The more we tax, the less of the thing we're supposed to have. That's the idea here, okay? So this market efficiency idea, we have a behavioral or a social problem, and the tax is supposed to more or less get rid of that problem, and so then you get that last idea, indifference to revenue. This is key to understanding a sin tax or any Pigouvian tax. You have to be indifferent to the revenue you're going to generate because your whole idea is that you're getting rid of the behavior and therefore getting rid of the tax. So you can't run a society on Pigouvian taxes. Taxes intending to change behavior and reduce consumption. This is why, incidentally, we have so much political speech around corporate taxes and investment taxes, because they're understood to have behavioral effects, and we want those activities. We do not want the tax to get rid of the investment because we won't have the revenue either. See, we have this in income tax, we see it in corporate tax, this is ubiquitous. But it's just the most obvious or clear, we see it the most clearly when we're talking about sin taxes. So, I want to change the behavior, I don't want people engaging in the behavior, and I'm indifferent to revenue. This is key. I have to be indifferent to revenue in order for me to be serious and sell politically a sin tax. I have to say this behavior is so objectionable that the tax is meant to stop the behavior, not raise revenue for any public spending purposes. Okay, so far so good. Now, are carbon taxes sin taxes? Well, of course they are. Of course they are. And what is the sin? The sin is polluting the environment and not paying for it, right? Polluter pays principle. That's the sin, and it's all the same issues as any sin tax, right? Same issues of market inefficiency where the price does not reflect the cost, same behavioral pattern, and theoretically, same revenue neutrality, same revenue indifference. You're not trying to catch revenue, not trying to raise revenue with a carbon tax. Is that believable? I don't know. Okay, so the same issues, and so then we come to the carbon tax starting to take off. It's a sin, so carbon is now getting that political push in our rhetoric as sin. Well, carbon and smoking are the same. They're both bad. So we're using excise taxes to tax them out of existence. Now, I don't object to this, and you're going to hear from Tatiana and both, and the rest of the panel. You're going to hear that we are actually trending, we're seeing a trend in excise tax on carbon globally. This is the way. So I am not here to say that what I'm about to suggest to you as an alternative is in any way viable. I understand the momentum. The momentum is excise taxes to the sin, just in the same way as any other sin tax. That is the momentum that we are in globally. That is the moment we are in. But I don't like it. I don't like it because I think the market efficiency is more interesting and more important to solve, and I am not sure it's a behavioral problem in the same way that other sin taxes are, because the micro behaviors aren't like the smoker should pay for the cigarette, but I'm not sure who should pay for the emissions, because we built our society on things that create a carbon problem, right? So I'm not sure there's a perfect parallel, and I am going to try to convince you in 14 minutes and 20 seconds that we shouldn't be using excise taxes at all, because what we have here is a market efficiency mistake in the income tax. And that's really what we should be focused on. Now, you're not going to believe me, and you're not going to like my solution, and I'm prepared for that. But I still think it's worth thinking about why you don't like it and why you hate my solution, why you will hate my solution. Because this is actually a problem that I don't think is going to go away, and I do not believe we are revenue neutral when it comes to carbon taxes. Okay, so I say here, as I say here, I want to use the income tax as much as possible, and I'm going to tell you a little secret. One of the reasons I want to use the income tax is because people don't understand the income tax, and specifically the corporate tax. They don't get it. And so therefore, it's not a political football in the same way as a carbon tax, because people don't associate the corporate tax. It's not nearly quite a sin to be a corporation. It's close in some quarters, I will grant you. To be a corporation is to be a sin to some. But it's not equivalent, right? So I like to use the income tax for that reason. It's a little more insulated from the kind of ups and downs of political speech, populist rhetoric. It's a little distance from that. And I want experts to be thinking about this problem and not politicians. Sorry, some of you are politicians or want to be politicians. I'm sorry, you have my sympathies for that life goal, but I don't want that. I don't want politicians to be tossing around this tax like a political football, because it's important to get this correct. It's important to get it right, I think, because it's a market efficiency problem. Okay, so how am I going to do this? Well, now is the part where you get upset with me. I'm going to do it with transfer pricing. Here's the idea. If a price in the market, and I don't mean the retail market, it could be the B2B market, the internal firm price, does not reflect externalized costs, then the price is wrong. It's wrong. And you could reprice it to reflect the internalized price, and you can do that with transfer pricing. Now, I'm going to give you an example, and it's going to be a short one, but I'm going to just add one little detail to this. More or less, I want to use the transfer pricing rules that we have expanded, and I want to use an external measure of externalities, which are called life cycle assessments. Now, if you've never heard of life cycle assessments, you can, Google, and you'll see there's a deep scientific literature, and then there's a wide applied field. So, for example, there's a nonprofit in Europe called True Price. I think it's based in the Netherlands, in fact. and they price the externality of goods on a good by good basis. So the life cycle, the Journal of Life Cycle Assessment, which is in Elsevier, is in Scopus. This is a revered journal. Every issue has life cycle assessments of very specific items. I'll give you an example. The blue jean, you know, jeans. You all own a pair of jeans, and the life cycle assessment has been done by scientific, study, by a method. They're all discussing the method. You know, there's a whole field of people thinking about this. And what they have shown is that if you go into a store and you see a pair of jeans and the price is 30 euros or less, this is not sustainable to produce. It's impossible to build a pair of jeans sustainably. And what do they mean? The only way you can build a pair of jeans for 30 euros is if you underpay labor severely and you dump effluent into the waters, right? The dye, you know, the blue jean dye, it goes in the water and you don't clean up after yourself. That's how you litter and you abuse people. That is how you make a pair of jeans for 30 euros. And so True Price, using life cycle assessment, determined a number of prices that would have to be built in order to know for sure that the jeans were sustainably produced. And they list a bunch of things, and I'm just going to give you an example. For example, they list that for the pair of jeans to be sustainable, it would have to cost 70 euro cents more to fix the labor problem per pair of jeans. 70 cents. 70 cents. It's not that much. A little bit more for the water problem. Okay, so, and what they do is they say, basically, they do the math, and they say, if the jeans were sustainably priced, it would be 42 euros minimum. This is basic, like, you aren't failing to pay your workers. You aren't refusing them bathroom breaks. This basic minimum. This is not like living in the lap of luxury type of activity. This is minimum, okay? So I say to myself, okay, now that's interesting, but how do I take that the price should be 42 when it is 30, and what do I do with that? I look at the transfer price that went up the chain, let's say in a multinational. I look at the transfer price and I say, you underpriced at source. The price should have been that 70 cents more. So now we get to slide 2, and I'll show you how. Okay. So here you can see A and B, and let's say that B is the source country, and this is where the jeans are made, and A is going to distribute it out, you know, in the world. And what we see here, oh, I gave you the second one anyway, that's fine, good. We have the whole slide now. Less tech to walk around with. So on the left, you see that the bottom, B, has a stated cost of $5. That's the unsustainable price, right? The price with externalities externalized. Labor is being abused, water is being polluted, politicians are being bribed, whatever measure of sustainability that the life cycle assessment people can come up with, that's missing from that $5. And then you see this, I just use a full cost markup of 10% to make my life easier and yours, and to try to talk you into believing that transfer pricing can solve this problem. So then the transfer price you see is $5.50, and so the profit in B is 50, and then it goes up to A, again still on the left, and you see we're gonna retail price it at $8, so there's the profit. The cost of $5.50, the intercompany price $5.50 gives us a profit of $2.50. Okay, that's just our base scenario, and of course, I'm assuming a multinational, I'm assuming related companies, and you will say to me, but what if? What if they're not related companies? What if it's not a multinational? You're gonna use the same principle? I am, if you let me, but you probably won't let me. Politicians won't let me, and experts won't let me, but let's pretend, let's suspend our disbelief for a moment and pretend that you would agree with me. The transfer pricing, it shows us the way. But it's not limited, it can't be. It can't be limited to just related companies in a multinational scenario, right? It has to be any price that doesn't reflect the externalities, it would have to go through the same assessment. And you would have to say, okay, are we willing to live with retail prices, consumer prices, that reflect costs that are externalized onto society, both environmental, pure environmental, like water quality, air quality, and also social, as in the treatment of labor and so on, healthcare outcomes for workers and so on. So if we're okay with it, we don't have to change anything, but if we have to change it, transfer pricing is just to show you how we would do it. So now we go to the right side of the slide. Here you see on the right, B, again at source, where Allison comes along and says, we're gonna reprice you. We're gonna reprice your $5 stated cost, and we're gonna say, hey, we did a life cycle assessment, and it shows your price should have been 7 instead of 5. Just as the blue jean price should have been 42 instead of 30, right? And so I'm gonna say your externalized cost is 2, so now your full cost markup at 10 is gonna give me 570 instead of 550. Okay, so your sustainable profit is still the same 50 as you had before, but your unsustainable profit, that externalized cost, is 20. Now, what have I accomplished, you might say? Other than annoying a lot of transfer pricing experts who will tell me rightly and correctly that what I'm asking you to do is go to an external economic indicator that people aren't familiar with. And to that I say, welcome to transfer pricing. That is what transfer pricing does. It uses external economic analysts to find comparables and use internal analysis to decide, whether the price is right. And I'm saying just one more marker in the scientific literature, one more marker that specifically looks at sustainability, one more marker that is in a development stage, and the scientists themselves are arguing about whether it's legitimate and whether this method works or that method works. But I would say anybody who thinks transfer pricing is an exact science is lying to yourself or themselves or both, right? So here, my pricing is going to say Brazil, B, I have B, so I say Brazil, the source country, is transfer price this 20 cents back into Brazil. Now, is this a sin tax? No, because presumably in a world of globe, in a world of minimum taxes, all I have done with the transfer price is shift the income from one country to the other, from A, let's say Andorra, to B, Brazil, and that shouldn't change the outcome in a world of minimum taxes. But you and I both know that it will. It will change the outcome. If we get more at source, it will change the outcome. Now, I know that if I say Brazil should do this, you'll all laugh at me and say Brazil already does everything different than the rest of the world, and you feel a little uneasy about it. So we won't make you do it first. It's okay, don't worry. I'm not asking Brazil to be first. But I am suggesting that a source country could transfer price their way without changing the law. You don't have to change the law to do this. Because transfer pricing is an art, not a science. And you could regulate this. So, for example, you could write it into your regs that you have to do a life cycle assessment. Intercompany transfer prices have to be subject to a life cycle assessment to determine the sustainable and unsustainable costs. Now, I will just add one thing. If we get to a point where it is just shifting from one to the other, and this is not changing how much income is actually taxed, because by some miracle we do have a global minimum tax, then I'm gonna say to you, okay, but now I'm gonna put the hammer on this, because if this is truly unsustainable profit, my 20 cents, then it's a windfall. It's a windfall that is unearned, right? Because it's externalized. And as we all know, windfalls can be taxed away. People will do the behavior. They will continue to produce the product under conditions of a windfall. That's why windfall taxes can be extraordinarily high, because the idea is that it's not going to change behavior. Now, I know that's a bridge too far. I've gone too far. You don't agree with that. There's no way you are going to agree with that. But still, I will say, how about, okay, maybe not 100% tax on that unsustainable profit. I get it. It's too far for you. But, it doesn't have to be nothing. It could be the regular tax plus just a little tiny surtax. Okay, I have 1 minute to wrap this up. The idea, obviously, I put it on the title. transfer it in and tax it away, all of the unsustainable profit. Leave the sustainable profit alone and transfer and tax away the unsustainable profit and do it through the income tax so that the politicians won't be able to bat it around quite so easily in the public mind. And you are still getting at the basic problem of all of these taxes, which is that we have an externalization of cost problem. And really, what good is the income tax if it can't actually solve that problem? So that's my 2 cents for you. It's been a great, enormous pleasure to share this research with you, and I look forward to the discussion. Thank you.
Bom, excelente.
Excellent. Well, we're going to have a QR code on the screen through which you can ask your questions. And if we have time in the end of this panel, then we're going to have them answered. Now let's move on to Tatiana Falcão. She'll be speaking about the proposition, the multilateral proposition for the carbon taxation. And I think that this is a good counterpoint to what Professor Allison has just explained to us. Thank you. I'll be here to see the slides. Thank you very much. And first of all, thank you for the invitation, Professor Schwerer, to be here in this wonderful auditorium. This is the first time I come to this auditorium, even though I'm Brazilian. I'm really amazed at the size and also the splendor of this room. It's a great pleasure to be here and also to present you this work in Brazil, because I have delivered it in many other parts of the world, but have never had a chance to show it to Brazilians. I was thinking how I could establish the connection between this topic, which will take you to another dimension. We're going to be speaking about the multilaterality of a tax on carbon that not even exists here in Brazil, and how to bridge it to other topics. So I think that we can start from the fact that there was a tax reform, and he also brought this elective tax that is now levied on environmental aspects that is not regulated yet, at least in Brazil. But the selective tax based on environmental aspects is something that has already been created. Carbon tax was supposed to be one of those taxes. Now, let's imagine the world in which the countries have agreed to this multilateral treaty, and the country will have to have this carbon tax applied domestically, because this has to correspond to the multilateral treaty. So I start from the end, actually. So what are the prospects for this? Because is this a legal thesis, something feasible, practical? Well, this is still being discussed today, and it was proposed within the PT LARC. I can see Natalia, she recognizes it. So it was discussed by the Latin American countries within that context, and the reason why it was accepted for discussion is because actually Latin America, there is a consensus on the carbon tax domestically. So Argentina has one, and Chile two, Mexico, Costa Rica is considering that one now, Chile too. So when you have a region like Latin America in which several countries have implemented carbon taxes, we can think on regionalization and then multilateralization. So this is the connection. And also to bridge this with Allison's talk, you know, if you connect that with income tax, every time you think about a sin tax or a tax on or excise tax, which is meant to eliminate a kind of a behavior. We want to shift the behavior of people, and the change will be in the pattern of behavior of consumers. So you try to implement this tax to stop that kind of habit based on this economic stimulus. If diesel is more expensive than gas, then they will start to consume more gas. So that's the rationale behind it. So when we speak about carbon tax, we have to use the proxy to determine how you can distinguish that economically, and that will be the amount of carbon in the product and fuel, for example, or fossil fuels. So then you can see how much carbon is inside that product. Then how do you do that? This is based on science and there are calculations to do that. So this is nothing for the for policymaker to do. And there are penalties for this, and there are calculations for products that are being consumed in Latin America. Well, this is a large introduction, and my time is just going up. So, assuming that we have carbon tax and then we have to distinguish based on the pollutants capacity of that product existing in the country, you can start to think of doing that from the multilateral perspective. This is a project that has been developed together with International Center of Tax based in England, and it took 2.5 years to be completed. We consulted more than 1,000 experts, not only in taxation but also in environment and public policies, international law. And with this, we built this multilateral treaty to tax carbon. There are 31 articles. The idea is that this multilateral treaty is enforced based on the premises or the existing premises. So this affects all the decisions that have been taken when the treaty was designed. So carbon is the basis of taxation. Is not the equivalent to carbon dioxide that have to do with the greenhouse gas emissions. So there is a margin of scope that can be expanded within the treaty. But today we're just focusing on carbon. And because there is an agreement as a result of the COP negotiations, and carbon is really what has been driving to the increase of the greenhouse or the GHG, and this is what is necessary for us to achieve the Article 2 objectives in the Paris Convention. And this is what has to do according to the 1990s standards. The basic rule is to tax carbon embedded in fossil fuel minerals. And fossil fuel is a crude oil that is extracted from the land, from the soil, or carbon, or coal, sorry. And then we have all the derivatives from those products like diesel, gasoline, and natural gas. There are two optional articles. These are the only ones that are optional for adopting the treaty. One is emissions deriving from sea transportation, the other one taxation on air transportation. The reason for them to be optional is because there are still discussions being conducted at the IMO level and also at ICAO, which is for aviation, on how to determine these emissions. And because there is no legal certainty on how countries are going to position with regard to taxation of these transportation means, so they are really the ones that affect trade and so on. So this is why these articles are optional. And there is also a scope for expansion to cover plastics because they are produced based on fossil fuel, and fishing because the fish also carries carbon dioxide, and other implicit and explicit prices.
Biofuels, which is a huge impact in Brazil, but as biofuels are manufactured from blends. This is because some biofuels are made from a mix of bio with a fossil product. Here's the main PowerPoint explaining how the multilateral treaty works. The preeminence rule, that is how it's preemptive rule, I'm sorry, regarding the prospection. The first country that can prospect this oil and tax this product would be the extracting country prospecting the oil. So extractive countries. So this country chooses not to tax or not be part of the treaty. The right to tax goes for the refinery country or processing for natural gas. If also does not decide to tax, there is the consumption country. The ideal the original idea, the what we would think the consumption countries would be the first one to join this multilateral treaty because consuming countries are from the North Cone countries and most of them poses some taxation on countries, but prospecting countries they are also considering tax on carbon. So if we have let's imagine the first country prospecting decides not to tax. Then it goes to the secondary country. If the refinery country decides to tax, it can do escaping emissions which are those not captured by the tax. They were consumed from the moment of prospection to the refinery moment, but they can be computed based on math. We know which emissions are, they can be embedded on the tax basis by the second allocation or third allocation country. There's another rule in the treaty, the difference of taxation, because the treaty is in the floor taxation. So the treaty should set different levels of taxation in developing country. So it's low, middle, high end countries, and it's set forth by the World Bank. So there are minimal standards of for taxation. The minimum to reach the Paris Treaty goals. IPCC sets forth that for 030 the floor would be a rate between 20 and $80 by carbon ton. So the minimum rate would be defined in accordance with IPCC standard. But not to prohibit or the purpose of the treaty is to make countries to have more will to tax more. The floor to tax within these brackets, but those countries with tax on carbon higher rates than the minimum rate, they would be stimulated to tax more. The typical case in the doctrine, Sweden, $150 tax per carbon, but this is an out of the curve case. Now, within the structure of the multilateral treaty, we have a extractor country like Brazil, Ghana, and the minimum base is $20 per ton. And we have Sweden on the tertiary allocation with $150 per ton. If the treaty set for the minimum tax was collected and no more taxes will be levied within the treaty context, Sweden has a problem because the fuel imported in Sweden would be cheaper than the fuel through or manufactured within the domestic market. So, to avoid this kind of outcome, what the treaty does, it allows what we internal border carbon adjustment. So within the context of the treaty, there's a difference regarding rates of more than 10%. With this difference between the extracting country and the consumption country, Sweden might do a top up tax, taxing the surplus and then the parity of cost equivalence of the fuel when the product is imported towards the domestic market. Notice every time the fuel goes to a domestic enters a market enters a domestic market, I'm sorry, it is levied on import taxes. So when it's consumed, tax it's always when the product enters the country. So this is sustained by all economists. This doing of things because you manufacture a price impacting the whole economy with the tax on carbon, and you differentiate the price of all products that are energy related and fossil fuel, not clearly, but all productive process that use fossil fuel while making their economic activities in order to attribute the carbon price to all these processes, so the whole economy is affected, including the informal economy, which is an important thing for developing countries because it's difficult to be reached by the income tax or different ways of taxation. Now, briefly, because my time is almost over, just to say that the revenue from such tax goes to the country that levied the tax. This is the advantage. If you are extracting country, developing country, most extracting countries are developing countries, but you don't want to tax, you waive the right of taxing, and there's the issue regarding competition, which is inherent to the system set up. But if you rather tax, you retain the tax from the revenue from this tax, and a percentage of this tax go to the administration of the treaty as a whole, because you need a secretariat and structure for negotiation amongst the parties, and part for the development of a joint fund for the funding of technical cooperation. So the idea to create a climate law. So if you have climate club, I'm sorry, if you start with this club, you have access to the best technology and you do the energy transition within the same pace of other countries worldwide. So the idea is to have access to these technologies, and you develop with the aid of your peers and share this within the community of the treaty. And this is the third percentage not set forth by the treaty, and it should be subject matter of negotiation amongst the parties for the development of new technology. And the remaining will go to public general budget and use for specific purpose of countries at issue. So this there's a paper, the treaty, a paper explaining the options when the treaty was drawn up. The link is here if you want to share the slides. I would love to have the maximum number of access, and thank you for your attention, and I apologize for taking more time than the given time. Thank you, Tatiana. Now I pass the floor directly for Professor Rolim, addressing a more wide subject, the national obligation of states regarding environment taxation and health under the eye of the Human Rights Convention. So, Professor, you take the floor, please. Good morning. I'm so pleased to be here again in this International Congress for Tax Law, and I congratulate all the members, Professor Celso, chairman of this panel, Flavio, and for the professors that I know personally, including Professor Alison for IFA. We've met sometimes before and had the pleasure to meet Dra. Paula Rodrigues today, who will be talking about as taxation. And she's highly enthusiastic on the subject. This is very good because the Taxation is gaining momentum, not only carbon tax, it's a special moment, but all the subject as connected to taxation. My share here would be regarding the public international law, especially international human rights, and the liaison between the international taxation and carbon tax. That I will pose a question by the end following the excellent presentation by Professor Tatiana Falcão. With this in mind, regarding international rights, human rights, we have here two references regarding regional courts, Inter-American Courts for Human Rights, and European Court for Human Rights. This is the order of regional courts and more international order. This is because if it was chronologically wise, the decision by the European Court of Human Rights would be the last one, the recent, very fresh, deciding now last April current year. So very interesting. Let's see if we have time to comment this because it mentions carbon tax that Sweden has introduced, at which measure this carbon tax has aid Switzerland to reach its pledges, commitments towards carbon footprint. And then a court by the Human Rights Commission of UN and a resolution by the latter regarding the environment as a human right. Well, therefore, the first decision or ruling, so no, it was neither it or nor. It was advisory opinion, which is one that would be binding in the sense that if any case of dispute reaches this court, Inter-American Court of Human Rights will follow this opinion. Therefore, it is relevant, and it was the first in terms of international courts that consecrated the protection to the environment based on the right to life and personal integrity. Also, there was a divergency, the rights to health would not be will not would support this right to life and personal integrity. There was not a consensus, but both articles were enough to consecrate the protection to environment as a human right. With this in mind, we have also recalling. Also, there's another convention of human rights. Someone close to me recall. And what about Africa? Why we don't mention it? Because it's relevant, the case. But well-known news, the African Convention of Human Rights was the first one from the 18th and recently that consecrated expressly the protection to environment as a human right. People have the right to it. It's not a case law and relevant precedent was not listed here, but it deserves a being recognized as the express in the convention expressed by the convention in Africa. And the European Court of Human Rights have decided based on Article 8 right to respect for private life and family life. Article 8, not the second, right to life on an overall, because it was not needed to say, just to simplify things. There are other factors regarding procedures and so forth, but the court decided that for the first time ever, that protection to environment based on the order international order as a whole regarding treaties, not only Paris but other international conventions, the protection to environment is a human right, individual, personal, and also enforceable to legal entities. Interesting in this case, as mentioned, that Switzerland tried not did not comply with its pledges to reduce carbon, and for many reasons. But Switzerland had introduced the carbon taxes of 100 Swiss francs, which is not something irrelevant. It's a substantial by ton of carbon footprint. But this carbon tax was not enough because it did not implement the other measures that would be necessary in order to reduce carbon footprint. And here, regarding the eye of international human rights, all the courts also insist that the protection to human rights should be something practical and effective. It had to be shown. If so there's a commitment to reduce carbon emissions, it has to be evidenced. You have to have proofs, and the instruments should be proportional and fit for use to reach this purpose. Therefore, based on this leading case ruled by the Grand Chamber, which is the plenary of the court, in a way that was unanimous. There was one vote against from an English judge that construed literally the convention and saying that the convention did not have of the scope of protection to the environment. But it 16 to 1 votes and practically unanimous in this sense. With this in mind, another relevant decision from 2022, all decisions, they are quite recent. 17 is the first, 5 years ago. Of course, there was a consensus, and countries were already adopting domestic measures in order to protect the environment, which is a need, and it's calling to be done because we have to do it. So decisions, they portrayed what what had already a consensus in international community and foreseen by some treaties. And finally, the resolution by UN of 2022, right to a clean, healthy and sustainable environment, decided in 2022. Of course, it's a resolution by the General Assembly of UN. It's not a resolution to say, it's not a soft law binding, it's not binding to the countries. But simultaneously, the General Assembly of UN consulted the International Justice Court in order that it would express itself about the international responsibility of the states regarding the protection of the environment. And in the COP conference in Dubai last year, we had a Brazilian judge, member of the Justice International Court, who did an excellent summary of the stage of the jurisprudence 2025. The case, a summary about the case law, and another international decision within the scope of accountability, international accountability, responsibility of states regarding environment protection. Well, very well. What all this has to do with taxation? We saw the carbon tax being mentioned. This is a direct relation. But what else we have regarding relationship? It is a consensus in doctrine and also case law, and the reason to be of taxes is the fulfilling of needs of states, implementation of public policies, and also human rights. Therefore, human rights being here, the grounding base of a fair legal system, tax legal system. So it seems to me evident and direct the relation with taxation. So my time is almost over. Here I share with you the the market operate. We have cap and trade. The state intervenes and setting forth a cap for carbon footprint to reach the reduction by which the country pledged according to the Paris Agreement. So the country sets forth a cap for emissions. The smaller the cap, less carbon emissions, but more difficulties will be faced regarding the negotiation of these rights regarding emission.
And then we have the voluntary market that doesn't have cap, or and companies that have green projects can market those securities, but because our purpose here is to reduce carbon emissions, it doesn't have to do with that. But on the other hand, it favors green projects. What is the advantage of carbon tax when it comes down to cap and trade system? There is a cap for certain industries in the economy for carbon emissions, and carbon tax, both carbon tax establishes that the amount is fixed. So the amount to be paid based on carbon emissions is X, and differently from cap, where we just have the limit. So there is an uncertainty involved in that. So both solutions are interesting because on the one hand, carbon tax assures you what is the cost, but it is uncertain with regard to the final result because whether it can really reduce the carbon emissions. On the other hand, the cap and trade system gives you this assurance because cap is established. So this reduction is achievable for certain industries. However, it is uncertain whether price or how prices will be negotiated. These are not the only one mechanisms, but they are the main ones. And I believe that they complement each other. So I think that we should move on to the Q&A. But the first question here is, are states obliged to use both mechanisms, carbon tax and cap and trade? This is a controversial question, but in view of international law, and also according to the Human Rights Court decision, there is a margin for choosing which measure you want to adopt in order to achieve your end. And the margin is big as to the choices, but is very narrow with regard to the effective protection to be achieved because it had also to be practical. So we have to feel that in the air that we breathe, that there is really a protection. So in my opinion, we can see how they can complement each other. And these two measures should be mandatory in view of the public international law. Now, with regard to carbon tax, Tatiana, I have the question. Well, this is the question I pose to you because she's an expert in this topic. Are states compelled to enter into a multilateral agreement on carbon tax? We can see that there is a momentum for that, but are the states really required to do that or just really compelled to do that? Because compelled is an interesting word for that. I think that this is an irresistible invitation for that. So, would you please? From the environmental perspective, it's good because, of course, this has to do with environmental obligations. Brazil is a member to the Paris Treaty, and Brazil has promised to fulfill the Paris Treaty goals. And these are mitigation adaptation, and the only mechanisms that are able to achieve that are tax measures. So, either for direct or indirect taxation, countries have to establish any type of tax instrument to mitigate carbon emissions. So, either through the multilateral agreement and the discussion or any other means, I think that the answer is yes. Countries are really compelled, and I think that compel is really the best word for that. Okay, thank you.
Para o contexto da reforma tributária,
Now let's pass the floor to Professor José Maria Arruda de Andrade. He'll be speaking about the selective tax and also reform in Brazil. Good morning, everyone. It's a pleasure to be here at the IBDT Congress and this is auditorium. I'd like to thank uh, the Reading Magazine for the invitation and also the invitation given or sent me to by our full professor, Professor Schwerer and Humberto Avila. I would like to greet everyone participating in this organization on behalf of many colleagues like the technical staff, our interpreters, and people in the service. So I would like to speak about the tax instruments used in environmental landscape in order to face the agenda considering the tax reform that is going to be discussed in Brazil. Because of time constraints, I'm going directly to this selective tax that has been created under our tax reform, and now it is being regulated. So this is why my focus will be very limited. The more I study taxation as an instrument to intervene in the state, the more I realize that there is a big difference between international debate on taxation, which is which covers economy, and we have experts from Adam Smith and Frank Ramsey and Arthur Pigou, or all the negative externalities. So there's a big difference between this debate, which is in theory, with the debate of the reports published by World Bank and OECD or other international organizations that address what is a good tax, for example, a sin tax or a selective tax, to the domestic tax analysis of each country. So many times there is just a metaphor between all of them. So this is why there is a need for us not just to buy ideas based on their names. With the tax reform to be implemented in the next couple of years in Brazil, we have different levels of taxation. And this will also impact consumption, economy. So we have goods and services that are not taxed, and then we have a tax rate that is expected from 10 to 2%. Goods and services that will be levied on 21%, and that will be the reference rate, well, or the standard rate, or the selective tax that will be a surplus or something on top of the prices on goods and services that are harmful to health and to the environment. So within this range of options from 0 to 28 plus something else on sin tax or selective tax, we have a lot. Sometimes we just buy a couple of ideas as if being, something that we really need. Everyone is speaking of this tag, this is a trend, and this is the momentum. But sometimes I say, well, in the US, sale tax is 7% and sin tax of 5%. And that's how it works, and it works well. Now, in Brazil, we have products that have zero incentive and tax rate of 28%. Do you want something more? And we don't even have the same tax. Is it bad? No, not necessarily, but we have to be aware of the effective taxation and tax burden that is effective, which is different from nominal um, tax rates discussion. So, with regard to this environmental discussion, the main dimension to take into account is about how to control marketing and trade would take place on ore, iron, natural gas, liquid or gaseous, or and oil. Only that. Oh, but how about vehicles? Stop there, because selective tax is something that also have to do with excise tax, and which was already levied on vehicles. The only thing will be some variation. So this is not something just a continuation of something that we already had and should not be included in the new agenda. Now, some new things. Selective tax has already been created. Our foreign colleagues should know that. So this, and with regard to the other operations involving ore, today there is a cap of 0.28% on the amount of that operation. So that is the tax, and that part of the selective tax is a new thing in Brazil, and this is how it is established. So this is a surplus. Now, going beyond the name of a selective tax on those operations, we have to see how it works. As a tax resource, because as to taxation, this is something the microeconomic aspect, which is a distortion of a consumption price. Now, the other agenda is the one of the state. So, how the state may have resources to face this agenda, either environmental or health, and then here things do not really bridge, because the decision of the selective tax was something artificial. First, we have to say that tax reform was something built based on a very specific agenda. It was academic and political. It was not based on what the cities and municipalities understand. Here we have one federal district and 26 uh, states, and then more than 5,700 municipalities. So most of the measures that have been passed were practically bought, in the sense that they wanted to ensure states and municipalities that they would not lose anything at all. So there is a promise to reimburse 50 years for any losses, and in the case of the selective tax, because it replaces a tax that was brought, which is the excise tax, which in Brazil is called the tax on neutralized product. So the state keeps 50% of that tax, and states and municipalities receive 60%, rather, saying 60% of that. So, no, there is a very nice debate on the 21st century, which is tax this and that. And this is a selective tax. So people said, yeah, okay, but I want my money. I want 40 billion reals every year. So this will pay monthly until they add up to this amount. So the government said that we're going to call this environmental tax or public health tax, and then we're going to get some other products from the other ones that repeat, like vehicles or tobacco and alcohol, in order not to lose the tax collection. And then I'm going to assure you that if there is 1 cent less, I'm going to pay you. So there is no state operating the agenda. This There is no possibility that the states can really work on this public policy. because actually there is a goal which is to have a collection of 39 billion reals. And this really weakens the sin tax or any selective tax as being used as an instrument to operate. So it should be clear that if we have 65 billion reals as a collection that is necessary, not optimum, but necessary on penalty that the country has to reimburse the states and municipalities of the difference. So whichever I choose for political convenience or social convincement that they should be in this prohibited list of the prohibitory list of the sin tax, will have to come to that result. So, or please, just put your give your contribution here. Oh, we're just gonna use a soda. So, we don't want anything above that, but nothing below it. Having said that, how does selective tax work if its effect or its economic effect is such? Of course, it can really work, which we call microeconomically. So, in the case of ore, if we can really increase the amount of production from 0.25% and making it more expensive, the effect on reduction can and demand can really happen, but that will always depend on the type of sensitivity of the product to the distortion of a product. This is the elasticity effect, which it really requires elasticity of income. When you get economic change that depends on energy, then sensitivity is not really that high. Another thing that people usually forget, you want to create cost distortion, and for this, it's not really an excise tax that is amazing. And Professor Christian is right when she gets out of the box to get you all the forms because the cost of a product can be increased just by using the VAT. We don't even have to have a different tax rate. So this is why excise tax has this dimension. Now, if you believe on the importance of the economic agenda, political agenda in order to defend the environment, and if you believe that the increase in 0.25% or more is something that is environmental tax, and if you believe that there is no problem, that all the resources are not geared to meet the goals of the agenda, if you're not concerned that the amount being collected is not used for environmental goals, that's okay. Maybe that's a good beginning. Maybe 0.25% something else. But selective tax in Brazil under the constitution cannot be geared to health or the environment. So, because 60% goes to the states and municipalities, so this collection goes for you to ordinary expenses. We are in the period of elections in the municipalities. That's why we have a new pavement being done on the streets. So, from the perspective of the PIGU tax, this is just a metaphor aspect of externality that is being used as an incremental aspect. In concluding, the takeaway message is this: we have to think beyond incentive on price. There are other tax incentives to be used like that. We have a public expenditure to consider, custom taxes, and the agenda has been pushed by Europe and the US because they are selling too much clean energy products because countries have invested in that. So we have to be more imaginative in terms of institutions. Stop believing that the name of a tax and semantics is relevant. The fairy tale of Article 1 of a law does not tell what you do in the budget. My message is let's pay attention to the budget. Thank you.
to address the subject of sin taxes and tax reform, I invite Professor Tatiane Piscitelli. Good morning. I would like to thank Professor Luiz Eduardo Schwery for the invitation. I'm very pleased to attend one more Congress of IBDT and in this table, surrounded by friends and those I admire so much. I'm very pleased to talk after Professor José Maria to talk about the tax reform. And in this sense, I will share with you, I will to decrease the theory level to talk about the syntax under the eye of environmental aspects and failures we have regarding the regulation because we are addressing the regulation of the tax reform at the Senate and pose some critical points that might be interesting to cheer up this debate. Now, going directly to the point, what does the Constitution and 132 Amendment tax reform sets forth regarding environmental protection? First, the wording of Article 143, third paragraph, that sets forth new principle in tax matter. Amongst them, we have the environment protection, so it's a guidance for the tax policies draw up regarding the regulation of structures that are developed in the eye of the national tax system. Following this line, we have three saying which are very relevant. First, the possibility of an excise tax on goods and services harmful to the environment. Second, preferential tax regime for its use for biofuels and low carbon hydrogen. It's in Article 225, first paragraph, item 8 of the Constitution, and the differentiated taxation of our tax IPVA, which is the tax on cars based on vehicles' environmental impact. So it's also for the environmental aspect, but equally other taxes that can encompass the scenario regarding the protection of the environment through the national tax system and the rules that will be set forth and created. When we look towards the regulation, the tax reform, and the text under debate at the Senate, I would like to focus specifically on the selective tax, the subject matter of this table. And when we describe goods and services tax but selective tax under the eye of the environment, we have some choices that are controversial or at least incomplete. First, we will not have the taxation of fossil fuels. Well, carbon tax even less. So it's not even thought about. This would be an opportunity to talk, but this is not even part of the regulation, and I will not talk about this because it was well addressed by the table and those before me. So specific taxation for fossil, so we have a favorable regime for the biofuels, but there's no over taxation for these fuels which are accountable for greenhouse effect gases. For this, we chose about the burden on the instrument that generates the pollution. So a choice, like Professor José Maria just mentioned, of taxation on vehicles, which would be the instrument per se that would use fossil fuel, vessels and aircrafts. Instead of the fuel, we tax the instrument, and here we have a choice quite controversial as we will have the taxation of vehicles according to the greenhouse effect gases with the environmental impact it causes, but also electrical vehicles will be taxation. This per se will lead to a huge debate because electrical vehicles has a direct relation with batteries because their batteries can be harmful to the environment because the level of recyclability is very low. But even though there's a intense debate on tech development for recycling electrical cars, batteries, and the fact of selective taxes on electrical cars could recreate the technical development that could be healthy within the protection of environment and tax constitutional principle now talked. And also we have the taxation of ore, as Jose Maria mentioned, and therefore an attempt of molding the selective tax under the eye of environmental protection. My point here is a bit different from those addressed regarding carbon taxation of vehicles or even the possibility of the sufficiency of selective taxes for these purposes. My issue is in the regulation of the tax reform beyond what would be taxed by selective taxes, we also have, as Jose Maria mentioned, the possibility of a taxation reduced for certain goods and services and under the eye of IBS and CBS. So this model, the rate 0% and reduced by 60%. And there's an important detail here. Goods benefited by the 60% reduced rate, they cannot be burdened by selective taxes. And it makes sense to be so because the reasoning of reducing rates for goods and services through IBS is CBS is regarding accessibility is being essential goods. I cannot say it's essential, but it has to be taxed by selective taxes because it's harmful. So those goods with reduced rate, they're essential goods, not subject to the selective and express set forth by the Constitution, and the regulation of the tax reform sets forth which would be these goods in detail. Although Article 9 of the amendment for the Constitution is more generic, the tax reform regulation appoints the MCMs and SH and NBS classification. Amongst them, we have the possibility for agricultural inputs having a reduced rate. These better known and more controversial regarding environmental protection are fertilizers and pesticides. So the list of the NCM 38.08, they are subject to the favorable rate. Therefore, assets, there's a choice regarding non-selective taxation of such goods. Looking the international landscape, it is true that we have some countries that follow this path. They have here some, the source of the document mentions its UN document regarding environment program and tax choices, environmental impacts. So in fact, there are many countries regarding the scope of UN and also out of it in Asia, opting for even reduction in the which is it's the VAT for pesticides and agrotoxins. But it's important to know if it's the best policy, and if so, the one we are will build it within the context of tax reform. To answer this question and try to be on time, perhaps it's worth to see those countries that have taxes which have more burden on pesticide. Few countries and tax design is directly related with its efficiency, but this talk of Professor Jose Maria, it's very interesting this point. So we have Denmark, France, so forth, setting forth tax on pesticides in a different way in the eye of how toxic these goods are. It's not only regarding one rate over pesticide and looking these items in the eye of how toxic they are for the environment and consequently health. There are interest reports of OECD pointing out the impact regarding gender looking the taxation of pesticides because lands crops using more toxile pesticides are not family farmers normally generated by women, but conversely, those that are big ones. Now, talking specifically by the Danish case, recently published this study, which is an assessment of toxic pesticides under the eye of taxation, taking into account the environmental impact. So, how progressive it is in the eye of environmental impact. And the studies shows that basically the taxation has been effective in order to reduce pesticides consumption, which are more toxic and therefore higher impact in the environment, health for those working there. And there is a reduction of 16% on the use of these toxic pesticides with the replacement towards those with higher with lower, I'm sorry, environmental impact. And the study, in fact, the design of the tax is basic for stimulus of the migration of behavior and a choice and development of the industry towards fertilizer and pesticides less toxic. So people will go towards those less have less tax on this mm, product and more healthy and so forth. We could say organic, pesticides, fertilizers, or crops that are organic or sustainable. They could be favorable for a better treatment. We don't need to say this if we could tax in the light of how toxic these pesticides are. The chart arises from the same study in the same article showing something interesting. Due to the implementation of the tax, we have a higher consumption effect, which is the bigger line, due to the need for inventories. So, those using pesticides, they have stocks inventories, then the consumption drops, which is approximately 16%. This is relevant, it's in the agenda of the Supreme Court of Brazil regarding the previous system. There's an AGIM, which is the document uh, questioning tax benefits for the circulation of goods and excise tax in Brazil. So we have to have this debate on tax policies, but for this purpose, we have to step back, see the tax reform and its regulation, and see about selective taxes on pesticides and fertilizers. For this purpose, we need an exception to that was set forth, including all those pesticides of NMCM 3808, NCM 3808, they would have then a favorable rate except for those deemed as high toxicity grades by IBAMA and Visa. So we need an exception to think about a selective tax on these goods. What we cannot a priori start excluding selective taxes as the tax system of Brazil has as subject matter now also to protect the environment, we must think about policies following this slide. So this is food for thought now that we're talking again about tax reforms at the Senate to be able to at least not decide it now, because if it's done so later to go back and talk about selective taxes on pesticides aiming towards environmental protection will be harder. These were my remarks. I thank for the invitation and I managed to talk within the given time. To wrap up this panel, I invite Paula Rodrigues Carvalho talking about tax benefits related to ESG targets. So, good morning. Before starting, I would like to thank the IBDT team for the invitation here in the person of Professor Shueri. I'm a huge enthusiastic and fan of his research, and also Professor Flavio and Celso for the invitation to be in this table. And I must admit, I was quite stressed because I'm sitting with huge professors and those who study a lot about the subject. And I thought a lot, what could I share regarding my experience in this Congress? Where do we have work companies where I'm a corporate lawyer. I work with this for some time now, and I was thinking, where is the company within this equation? Where civil society will enter in this equation regarding sustainability? And when I started to think about this subject, the first thing came to my mind is ESG targets. And the reason for this is that ESG targets is started in OA with the UN document published, and they try, who cares? They try to lay down a parallel to the actual life a bit of these issues we have addressed so much, which is sustainability, issues regarding an ethical, fair, and arm's length environment. So it's something we cannot live without this. And when the Who Cares launched this program ESG Global Pact, it thought about the basic. It's no use disengaging governments in this item. I must engage civil society, companies. I think today companies understand better it's not just about profit. Today it's about a purpose. Therefore, no use being a company focused 100% in profit and then destroying the environment. As Tatiana mentioned, we have pesticides. Companies today, they are not concerned, they're focused on profits, but there's a society pressing for purpose. So I like to be in those companies that have a purpose and align with social environmental issues. And then we have the ESG that today there are many of those companies, approximately 1,000 as signatories to this. There's something that is not strong. And when we come to Brazil, currently we see several multinational companies adopting the ESG metrics. Many companies publishing reports on sustainability together with the auditing reports, but in Brazil, this compliance is so low. When we look sustainability targets, when we do a research on the Global Pact website, only 25% have complied with the net zero, the decarbonization, taking care of the climate, the 5 points. And I find 25 it's too low. And why we have this low compliance by Brazilian companies? MCHAM published an article. It was a research carried out by it in 2024 showing that big CEOs of the biggest Brazilian companies, they are concerned with the environmental and they want to comply to the ESG targets. But currently, they see the absence of a strong corporate culture. They don't see a possibility of being firm on it in order to see if they are complying with the ESG rules, and especially they suffer. It's funny to say, well, they say they address the point that the government should align more with those companies that want to adopt these metrics and purpose. It's 57% answered this in this research, the lack of funding by the government for green initiatives. And then I'm sharing with you food for thought for the Brazilian state, would have the constitutional aspect as a duty by the state for taking care of the environment. Everyone has the right to an ecological balanced environment, and how and to foster this sustainable state, the government couldn't grant a benefit. And for those companies working towards decarbonization and more efficient technologies, and my personal opinion is yes. Currently, we have some government benefits in the sense that towards reduction for those companies more aligned with this purpose we have.
They have an tax on circulation of goods that is reduced, also for the production of electric cars, and also we also have some other preserved areas that is not included in the calculation basis. We also have some other own land that is given, or some of the taxes that, or some of the tax collection is given to in a more percentage to some other states or cities, but the policy in general is not pretty much aligned with all this. Just try to favor large companies because somehow are helping Brazil to achieve the goals of the treaties to which Brazil has signed. So somehow they can achieve those goals based on their help. Now, it came to my mind that some of the benefits that we have today, we have the the tax of a good. So companies can deduct from 60 to 80% on the expenditures they have for the development of IT. We also have the free trade zone in Manaus that enjoy tax incentives in order to develop the region. We also have the Sudene and many other interventions that we have used at the state and municipal levels. And why not do something similar to that when we speak about companies that have been aligned with environmental purposes? Now that we are discussing the reform, so there is an article that can assure companies who invest in technology and are also modernizing can deduct expenses. Today we have the fiscal fees, and the position of the IRS is that those that are expenditures that are included in the law can be deducted. But how about the ones that have voluntary expenses? They run the risk of not even enjoy the credits resulting from the fiscal fees taxes. So this is why I brought this idea. And so there is the law of good for companies that invest in green technology. If this law can apply to them, can we expand it? And my idea is not just to give a word to those who are good. So I'm not against the sin tax. I am favorable to that. But my idea is that more people should be engaged in this cause. Because many times we discuss anything with large companies from donations or any other improvement, they say, what am I going to get from this? So if the tax benefit is granted, are we going to have more than 25 companies adhering to that? So this is what I wanted to bring to you. It's just a couple of inputs. And also I'd like to thank you for your attention. This is much more input from the corporate side. I think that we had excellent talks on how governments have been working, and I just wanted to bring you a little bit of my experience. I hope that I have added something to your knowledge on this, and I'll be very happy to participate in the Q&A session. Thank you.
Já estava contente em participar dessa mesa, mas depois de
Well, after all these talks, I'm really happy to have been at this panel. I'm also optimistic and hopeful. We are still in the early stages, in seeing tax norms as being something that can lead us somewhere as an incentive or a non-incentive in this field that is being under discussion here, which is the environment and human health. After hearing many of these talks, I think that it has been clear to everyone that this off-tax side is also very important, and the tax rules to which we are very used to use, and we should also see them from the different perspective. The state may also work in another field, and I was very happy with the sequence of talks and just ending that with the opinion from Paula. And I would like to remind you that something does not depend on the states or the companies, but from us valuing all these products that has something that has to do with an added value. Because otherwise we'll not be able to move on with these discussions. I would like to thank IBDT on behalf of Professor Schwerder, and also like to thank for the opportunity to be here with you in this panel. Thank you.